Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Chewy, ticker symbol CHWY. And so one of the reasons why I want to go over this chart is because it dropped nearly 10% on the day, closing at $18.34 on November 27th, as you can see with this big red daily candle there. And this video also serves to follow up on a couple videos that I had previously made on Chewy, which is where a lot of these lines come from. And so a couple things that I want to point out from those videos, one being this increasing higher highs that you see in the stock price, whereas with the RSI, you see lower highs. And so that is a sign of bearish divergence. Another tell that we were at a top recently is that when we first got up to this level, there was a close of $21.13, which I have marked in white here at the top. And there were no closes for multiple weeks above that level. So on, on November 15th, I believe that's when I made the last video because that's when I had drawn these red lines here. So on that day, the close was, yes, 21.13. So no closes above that level. So that's suggesting that every time it goes above that level, selling dominates. And so from that, there was a rejection on, looks like November 20th. There was a high of $21.10, so couldn't even get up to $21.13. But yeah, another reason why it's not surprising to see a pullback like this is because excuse me, on the way up, multiple gaps were formed. Some of those were filled with this dip here. However, there was still this gap down to 1859 that needed to be filled. And so on the day, November 27th, that gap was filled. So that's good news because there are no more gaps to the downside. All of them have been filled. However, support is still needed to be attained. And at this level, it's possible that this could be a bottom because there is all this consolidation over here. It could serve as support, especially with, let's see. Yeah, with the, I don't have a line drawn on it. I might actually do that right now. So the close on October 17th was $18.36. So I've got a line drawn right there. Unfortunately, the close today was slightly below that, but that could serve as support because it had acted as resistance over here. However, other levels below that that might be more significant, I have this one marked at $17.94 or approximately $18, round number, makes sense. And so that's really just based on the low on September 21st. And then you have consolidation around that level. And you also have the dip, the low on this day was actually $17.94. But you do have the tails of the candles, wicks of the candles over here. So that could be a level that support is gained at. And then also in this dashed white line I have drawn here at $17.53 based on the low of September 27th, or, just really like approximately $17.50. We think in whole dollars or quarters, 50 cents. That could be the next level of support if $18 is broken. And then finally, I believe I had this on the last video, $17.10 with this consolidation below that level that could serve as support. But hopefully, $18, if not $17.50 respected as support. But, really in an ideal situation, $18.30 36, this level basically that we're at right now, it's possible that could serve as support. So while it is a rough day with a nearly 10% drop, there are levels below and right around where we're at that could serve as support. So there's definitely some hope. And if you found this helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more content like this. Thanks a lot for watching.